Thanks for hanging on with us, traders. I'm Brianna Valesky here with Joel L. Connon on Benzinga's pre-market prep. We have Dan Nieman on the line. He's the portfolio manager of the Neiman Large Cap Value Fund. Dan, thanks for joining us this morning. How are you doing today?
I'm doing great. How are you guys doing?
We're good. It's a beautiful sunny morning in Detroit, so I don't think we can complain too much. To get things started, tell us a little bit about the Neiman Large Cap Value Fund.
Well, the New Logic Value Fund's been around. We're about to hit our 12th birthday on April 1st this year, and my dad and I started the fund back in 2003 with with a very what we feel is a very disciplined and repeatable process to buying large cap value stocks that pay a dividend and that we feel are undervalued based on fundamentals that we screen for on a monthly basis. We keep anywhere between 40 and 45 names in the fund. We're a small fund. We only have about $35 million in management. But we feel that over time, we have downside risk protection built into our philosophy by selling covered call options on stocks in the fund. And the combination of dividend stocks and covered call options provides some downside protection with potential for upside as well.
Can you give us a couple of names you're looking at right now that you feel are undervalued?
Well, there's with yesterday's kind of drop in stock prices, there's definitely names that are popping to the tops of our screen. A lot of the names are in oil or in financials. A couple of the oil names one of the oil names I feel is really undervalued right now is National Oil Varco. Another oil stock that is down quite a bit of late is Chevron, actually. So those two names are sort of the top of our oil sector area. Even though we don't sector rotate, we're really bottoms up in our approach.
Could you give us the tickers on those names?
Yeah, sure. National Oil Varco is Nancy Oscar Victor.
Perfect.
Chevron,
Yep.
obviously
Okay.
CVX.
Yep.
On the financial side, Bank of Montreal, Canadian company, has been down quite a bit lately, down 15% year to date, but it pays a nice dividend. The yield on that stock is over 4%. Axis is an insurance company actually that down a little bit, but its PE is down below 7 times earnings, so it's one that's at the top of our radar as well.
Just looking at this National Oil Varco here, and it's popping up on your radar. Now that must be based on some fundamentals because the chart's not looking pretty here. Could you just, without giving away your secret sauce, what fundamentals are you looking at here in this stock? Because I think the technicals are saying stay away.
Yeah, I mean, if you're a technical analyst, you probably sold National Oil well around 70. Right around 60 is when it kind of crossed our radar. We've actually held it in the fund for quite some time, so it's more of a buy-in opportunity into something that we've built a position in over the past 3 or 4 years. But looking at the fundamentals, it's got dividend growth close to 10%. Earnings per share growth rate is good. Revenue growth rate on a 5-year basis is over 10%. And when it's down 20% year to date, I feel like that's a decent time to be looking at potentially buying more to our position.
Are you going to need a rally in oil to get this thing back up to $60?
Well, National Oil Varco is a different type of oil company. They actually provide the drilling rig equipment. So, if there's too much supply and not enough demand, their stock gets hit. As soon as supply turns around and people start drilling more, they're going to be selling more equipment or, installing or helping rebuild equipment on oil rigs. And they haven't cornered the market, but they're certainly the leader in the space. So I feel like when that turns around at some point in the future, if you pick up National Oil well today at $50 a share, it's paying a 3.5%. The yield's 3.5%. So at least you're getting paid back something for your investment in the stock today. I feel it's a good buy at this low price compared to Schlumberger, which isn't quite as attractive today.
Okay, let's go out of your wheelhouse a little bit. Take a look at a few other stocks here. And did you notice Alibaba was green on the day yesterday in the weak market?
I did not notice Alibaba was green because it's not in my radar. It is a growth stock, and it's a new stock. My partner Glenn Wiggle, he actually manages a growth portfolio, and he's got it in his portfolio. He bought it, it's not right at the IPO, but shortly thereafter. And I've noticed, I keep it on on watch list just because it's in one of our portfolios at our firm. And it still needs some time before it approaches my area. I have expertise.
It has to have some value first, right?
Right, exactly. At least a penny in value.
Yeah.
That crossed my radar.
Okay, and I guess kind of would say the same thing about Netflix.
I would say the same thing on Netflix, and it's in my partner's portfolio as well.
Okay.
So when you look at growth stocks and you look across the board, I do know what growth and what the technical analysts are doing, and I think that a lot of times he has stocks that I don't have, and vice versa. So if it's not in my portfolio, I'd say it's probably a good growth stock.
Are there any other names in the tech sector that are in your fund?
Sure, there's quite a few names. Qualcomm's one. Intel's not in the fund, but it's on the radar. Apple's in the fund. Apple's been there since they started paying a dividend. Same with Western Digital, another great company that continues to grow its dividend year after year. I think Western Digital started paying a dividend in 2012 at 50 cents a year, an annualized 50 cents a year. Now it's paying, upwards of $2 a share on an annualized basis. Yep, $2 a share. So it's grown its dividend by, 150% or 1,500%, I believe.
Let's jump back to Apple a little bit. Obviously, it's been in the news a ton lately. Last week, it joined the Dow. This week, we had the Apple event on Monday talking about the watch, the MacBook, the healthcare kit. I mean, overall fundamental, what do you feel about the fundamentals on Apple?
Well, I think you have to look at the cash position of Apple and their position in the marketplace. Clearly, they're obviously the largest market cap stock right now. Of all stocks, so the addition to the Dow is probably inevitable. I think that the fundamentals are strong, and I think that there's buying opportunities in Apple along the way, especially if there's any price correction as it moves into the Dow and gets added to a lot of portfolios that have to hold Dow stock.
Okay, what about that move in Qualcomm yesterday? They did everything right, announced the buyback, and they really popped the stock in the pre-market. Didn't get anywhere near that level, pulled back on the session, actually ended up closing on its lows. Did you take that opportunity to lighten up at all, or are you in for the long haul?
We're in for the long haul in all of our stocks, and once we built a position in a stock, just like the National Oil of Arco, or Apple, we built a position. We're going to manage that position over time. So, I like the fact that Qualcomm made a bounce back from the $65 level. Part of our strategy is to sell covered calls on the stock. So at some point here in the near future, I may be looking to cover a portion of our position in a Qualcomm, even in the Apple stocks that have run up. Whereas the National Oil of Arco, I'm certainly not going to cover when it's hitting 52-week lows.
What is your criteria for selling the covered calls?
The criteria is on a monthly basis, I'm looking at stocks that have based on the market activity, either run up or we are looking to, or their fundamentals are now closing in on being overvalued. PEs are up, dividend yields are down. Those are quick tools for me to see how the stocks move generally lately. And I'm covering anywhere between, say, 10 all the way up to, say, 50% of an individual stock. And it's all based on really feel, where I feel the market is and where I feel it's headed on how much to cover of each individual stock or whether to cover it at all.
Are you short any Apple calls now?
We are, we have some outstanding calls for Apple out to 130.
Right. And
for July.
So basically, folks, and then everyone should understand this, let's say that Mr. Nieman sold them at $5, then he's captured or could sell the stock at 135, basically, if he with the option premium, giving himself a little bit of protection. If the stock closes below that level, he takes in the premium and still has the stock. In the event that it runs to 140 or 150, could get it called away from him. But good strategy used by a lot of money managers and individual investors. It's just not great when your stock gets called away. Dan, any final thoughts for our investors today here? Market trying to stage a little bit of a rebound.
I think the final thought would be, stick to your process. If you have a disciplined and repeatable process, no matter the market conditions. Stick to that process and don't try to chase hot stocks or sector rotate, or especially in the ETF world. If you're buying something and it goes down, and you believe in it, it has good fundamentals, add to it, because in the long run you'll get paid off.
Okay, Dan Nieman, portfolio manager of the Neiman Large Cap Value Fund. If you want to track its performance, the symbol is NEIMX. So thanks for coming on, Dan. We'll talk to you again soon.
Thanks, Dan.
Yeah, thank you both.